Time now for the markets with Leighton. And Leighton, you say that cotton is sliding on worries about the economy.
That's right, Artist. Futures had jumped at midweek, but then towards the end of the week, as we are recording this program, they had succumbed to the pressure from other outside markets. Also ahead this week, milk prices may have a bounce ahead. Some analysts think corn may be rationed, while lots of timber on the stump may keep wood prices low. We begin in livestock, where demand for pork is staying strong, according to most analysts. Naomi Bloom says that a key to keeping hogs in a long-term uptrend will be whether ham demand can be maintained.
We're exporting millions of pounds to China and to South Korea. And the key thing to watch right now in the hog market is the $80 area in the October contract and in the December contract, and how that correlates with ham. The demand for ham has to remain strong because traditionally in the fourth quarter we see supply levels come higher and prices go down. But if that ham demand can stay strong, that should keep the October and December futures above 80, which will keep it in the long-term uptrend and keep that market as a longer-term friendly buy.
This month has witnessed some wild swings in the Class 3 milk market. There was a big sell-off in milk over a week ago, and then the cheese price came down. Analysts say we are at some longer-term support levels now in the dairy market, while some short covering and maybe even a price bounce higher are projected. Trader Naomi Bloom thinks there's one factor in this market that overrides everything else.
We've got $7 corn, and in the deferred months we've got milk that's trading at $16, $17, and that doesn't work. It doesn't work. So if we can see demand pick up, either the milk price has to go higher or the feed price has to come down, but overall it's a shifting area. If we can hold support here, we'll go back up into the 20s.
The USDA is just out with its report on farm computer usage, and that brings us to the trivia quiz this week. How many Mississippi farms have computer access as of 2011? The answer is 32%, 59%, 74%, or 91%. I'll tell you in less than 5 minutes. Following the recent corn production estimate from the USDA, at least one ag economist says corn rationing among end users is inevitable. Darrell Good of the University of Illinois said this week that it looks like we have a small enough supply of corn that consumption will have to be restricted during the upcoming marketing year. However, he acknowledges that picture could change should demand weaken due to the economy or some other factors. Well, some analysts are wondering if USDA's boost in U.S. cotton yield and harvested acres in the August reports was a bit too optimistic. Extension ag economist John Michael Riley has been giving that some thought and shared some answers on Thursday morning. John Michael, let's begin first. Let's revisit those August 11th report numbers briefly.
Yes, this is the first month of objective field data that comes in to be reported. As a result of that, a slight increase in the harvested or yield per harvested acre, and also a slight bump in number of harvested acres for this filters on down into a larger production number, and then on down the line into a larger ending stock number. So overall, a fairly bearish report.
Well, in the days since that August 11th report, seemed to be some skepticism amongst analysts about, these numbers that maybe it's a little too optimistic. What's your feeling?
Well, they bumped the yield from 800 to 822 month over month. Again, first month of objective yield data, but you can't overlook the fact that there is a tremendous drought in Texas. Of course, Texas's harvested acres just pitiful, 52% abandonment rate for Texas versus 4% last year. So a lot of those acres are just not going to be touched, and those don't go into that yield number. But still, there is some skepticism there just because of the extreme heat that we've been experiencing, the tremendous drought in the southwestern region of the U.S. I guess I can understand that bit of skepticism.
All right, and as we record this, prices have come down a little bit as the week has gone on in the cotton market, and again, you say that's tied to this national economy weighing on prices.
Exactly. The sensitivity of cotton prices to the economy is much greater than, say, food and fuel commodities. As a result of this current roller coaster ride we've been going on in equities markets, cotton is suffering as a result of that. That's probably going to continue to be the leading indicator of where cotton prices are headed, is what the general economy is doing.
Well, what about the foreign front, export market, export competition?
Well, yeah, they did lower the export number for 2011 versus 2010. We're starting to see some slack off there. If you look at global production, up from previous years, ending stock number up from previous years, 46% stocks to use from a global standpoint. That's up a little bit from years past. So I think that's also playing into this overall cotton price.
It's no secret the slow economy is hurting Mississippi's timber industry. Pine saw timber prices are not expected to improve anytime soon, according to Extension Forestry economist James Henderson. This is leading many landowners to delay tree harvest activities on their property. Henderson says that as a result, there may be so much timber on the stump that prices will stay low beyond 2016, even if the housing market improves. Now to our trivia answer as we wrap up this portion of Farm Week. B is the right choice this week. The government says 59% of farms in Mississippi have computer access in 2011. That is up 6% from 2009.